Welcome to our video on retirement annuities. There's a lot to say about these great investments, so I'm going to try and squeeze it all in as fast as possible. Retirement annuities fall into both camps of tax beneficial investments. It creates a tax deduction as well as tax-free growth within the retirement annuity. As an example, the tax deduction that I referred to can be illustrated as follows. Say your taxable income is 1,000 Rand and you contribute 100 Rand to a retirement annuity. Instead of paying income tax on 1,000 Rand, you will be paying income tax on 1,000 Rand minus the 100 Rand contribution, so you'll only be paying income tax on the 900 Rand. So that means if you're at a tax rate of 30%, you'll be paying 30% tax on 900 Rand instead of 30% on 1,000 Rand. Effectively, that 100 Rand contribution has saved you 30 Rand in taxes that you would have paid. The second tax benefit of a retirement annuity, which is similar to that of a tax-free savings account, is that while invested, there is no internal tax placed on the growth of those investments, neither in the form of dividends tax, capital gains tax, or income tax. So what it means is that an investment in a retirement annuity in the exact same fund as an investment in an endowment or directly in your own name in the form of a discretionary investment will actually grow so much faster because you're getting compounded tax-free growth on compounded tax-free growth. Retirement annuities have certain limitations placed on them in the sense that you can only take a benefit after the age of 55. At the age of 55, at the earliest, you can then choose to take a maximum of 1/3 as a lump sum. So if your retirement annuity is 3 million Rand, when you retire, 1 million Rand can come out as a lump sum. The other 2/3 have to be provided in the form of an income throughout your retired life. The 1 million Rand is partially tax-free in that the first 500,000 is completely free of tax. It then goes up on a sliding scale to 18, 27, and the remainder is taxed at 36%. The income you receive on the 2/3 will be taxed as a normal income, just like a salary, at the pay-as-you-earn tax rates. Now, with correct planning and structuring, you can actually reduce your tax rates or your personal income tax rates in retirement, meaning that the benefit you receive from the contributions to your retirement annuity while working and the tax deduction you get from those contributions will still be significantly more advantageous than the taxes you pay coming out of the retirement annuity in retirement. Another very important feature of retirement annuities is that the assets accumulated within a retirement annuity that you have received a tax deduction on when contributing are excluded from your estate at death. So it's not just a retirement planning tool, it's also an estate planning tool. Meaning that you can have 10 million Rand in your retirement annuity at death and you will not have to pay the 20% estate duty or 25% estate duty, depending on your personal circumstances, on that 10 million Rand. That means your beneficiaries are 2 to 2.5 million Rand better off just because you've avoided those taxes. The other very, very important thing to consider about retirement annuities is that it is protected money. It's protected from creditors. You can owe 1 million Rand to your creditors and have 10 million Rand in your retirement annuity. They will be able to liquidate you, sell your house, take your car, and possibly some of your other investments, but they cannot touch the money in your retirement annuity. Retirement annuities are great planning tools, and there are even more strategies that a person can use to further enhance your welfare with this. We will make a different video on that at a later stage regarding the advanced uses of a retirement annuity. Every investor should have a retirement annuity and a tax-free savings account. They work hand in hand because the tax deduction you get from contributing to a retirement annuity can fund your tax-free savings account. Thank you.